Hi, I'm Chris Reid, Managing Director and CEO of ASX 300 listed company Neometals.
Chris, good to see you. We're going to catch up today about the battery recycling hub engineering cost study. That's a mouthful, but I want to kind of get into that. But maybe if you could just maybe for people new to your story, give them a sense of the total picture here in terms of the other projects, please.
Yeah, sure. So look, our main priority is the development and commercialization of 3 environmentally friendly processing technologies that we've developed. You know, they produce critical and strategic battery materials at the lowest point in the cost curves with a very, very low carbon footprint. And we've also got one residual mining asset that we're looking to develop.
Okay, right. Well, let's get on to the battery recycling components. Now, obviously, you've done the engineering studies. So what does it tell us?
Yeah, so look, it was really the culmination of, a good year of hard work. So a number of demonstration trials where we've had to, achieve targets that were materially above what we achieved when we set out. I think, once we entered into the agreement with Mercedes Benz, they put out this wonderful video and it had 96% recovery. And we sort of said to them, well, why would you say that? Like, none of the data that we've generated show that. We've got good recoveries at 85%, but, 96. And they said, well, look, that's where the battery regulations will end up, and that's where you'll need to be if you want to do business with us. And that was a bit of a come to Jesus moment. And we realised that we had to make process improvements to lift our recoveries, and we succeeded in demonstration trial 7 in hitting nickel, copper and cobalt of over 95% recoveries. Our new lithium fluoride product and recovery process, we're just waiting for the final assays on that. But previously, as lithium sulfate, we'd recovered 83.5%. So, we've exceeded ultimately what was the battery regulations that have been passed. I think we're looking for them to come into effect in the next couple of months.
Right, and let's talk at euros here, because obviously you're a business, you need to make money, so give us a sense of the margins involved.
Yeah, look, I think if you go to, for me, I always, cut exactly to that. So I think, on page 3, figure 1, what we've got there is the recovered value by the main elements, lithium, which is 50% of the revenue, nickel and cobalt. And we've got it there for a variety of chemistries. I guess the trend is in the EV batteries, the nickel, manganese, cobalt batteries, there'll be less cobalt. So I think if you have a look at NMC 811 as a predominant chemistry going forward, we can recover just under 9,000 euros per tonne of cell feed, and our operating costs throughout the whole plant, start to finish, are under 4,000. So if you work out, you got 21,000 tonnes throughput, and you can make a 5,000 euro margin. That's pretty good,
right? Okay. And if you look at your traditional shareholder base, mining, that's what they know, right? They understand the context and the backdrop of that. For you, you're kind of moving into the kind of industrial sector in a way,
yeah.
Early stages there. So it's kind of a bit of a transition for people to kind of work out, value and how to value you. So in that, can you help us understand what this can look like going forward? Because you talk about a hub and spoke component to this one, but just focusing on this for now, is this equivalent to what, a 5-year, 10-year life of mine? I guess it's contract driven.
Yeah, look, I mean, we run our models over a 20-year effective life for those plants. If we have a look at what is in a battery, if we have a look at an NMC battery, it's the same as having a ton of ore in front of a concentrator that's 15% nickel, 15% copper, 2% cobalt and 2% lithium, right? It's very, very hard to lose money. Just looking at those grades, you would make exceptional money. The hydromet refining is more expensive than the traditional pyromet, but, notwithstanding that, you're making 100% gross profit margin. So that would be the same as having a gold mine that's, receiving $2,000 per ounce and your cost is 1,000. Your biggest problem there is just finding more and more tons. So, that's one of the beautiful things about our business is that, we're really there to plant supply and technology license. Yes, we can supply a service if the car makers or cell makers want it. Yes, we're open to forming joint ventures with them. But, for us, it's market penetration. How do you get the biggest market penetration? Well, we were never worried about the feed, and every graph that you see says feed's going off the page and, exponential growth in feed. We can see that. So therefore, the key ingredient to success is who can build the plants when they're needed. And so that's why we partnered with SMS Group, a 150-year-old German plant builder with 14,000 people in 95 sites around the world and production headquarters on 4 continents. It's who can build the plants. And I think that's what discriminates us against a lot of people that they call our peers. Our peers are merchant recyclers who want to buy batteries and keep all the product themselves. Well, I've got news for them. The cell makers and car makers aren't going to let that happen. They're not going to sell a product where if they recycle it themselves, they get $9,000 worth of lithium, nickel, and cobalt. They're not going to sell that battery to you for $2,500 and turn around and buy the rest. These guys are going to come and see us, ask for a solution. Legally, they're going to have to recycle. Ethically, they need an ethical, sustainable, circular supply, lower carbon footprint, high recoveries. We've proven that we can make material. In fact, some of our customers have made cells with recycled material from Primobius.
Right. Okay. So I hear what you're saying. Obviously, it's going to get margins may actually get tighter and tighter going forward, and I guess the barriers to entry are going to be significant for anyone else entering here. So for you, in terms of that market penetration, first mover advantage, near first mover advantage, it's definitely going to be on your side. In fact, here's an interesting thing, because I was reading something earlier today about the kind of cost of gold discovery. You just put it in the context of a gold mining operation and the cost of that. The big barriers there are it can to make a 5 million ounce discovery, it can cost you 500 million to a couple of billion. This report said. So the cost for companies.
Well, the big guys will just buy it.
Yeah, absolutely. So, but for you, in terms of that, now you're in the market, and that kind of first mover advantage, the demonstration, and literally having an operation, does that put you at a distinct advantage compared to these some new entrants or new technologies coming through for battery recycling?
Yeah, well, look, I think the difference is that, our big American peers are merchant recyclers, and they've raised, some of them over $1 billion Australian dollars to commercialise and building big plants. And some of them struggle to feed them. And every car maker and cell maker knows that they're going to have the regulatory obligation to recycle their products at end of life. There is significant production scrap, failed cells, failed modules, QA/QC on the way through that they need to have a solution for. With the European battery regs, 65% of the materials must be generated in Europe. You have minimum recycled content declarations in new cells, and everyone wants lower carbon footprints, and recycling is the way to do that, because you absolve it of the upstream mining carbon footprint. Fortunately for us, you absolve it of the mining risk too. So essentially, what is the technology? Well, it's really a toll processing technology for battery recyclers, and we supply the plant. Like, it'll be built in a back-to-back agreement between Primobius and SMS. We will sell that plant to our customers. We will make money on that, and then we will get the royalty income. So, we have 5 royalty agreements, technology licenses, royalty agreements, and they have a 10% GSR as the royalty. That still delivers the customer the certainty that they get their materials back, the certainty around recoveries and operability and uptime. And, we've now put out the costs so they can quantify the economic benefits. And that's what the engineering cost study does. It gives the OPEX and CAPEX. It allows the customers to evaluate our technology. It enables our stakeholders to value what standalone plants can make and what the royalties might generate. So if you had a look at an NMC 811, you get about 9,000 euros per tonne. So 10% of that would be 900 euros a tonne, times by the throughput. That would be the royalty income that comes to the shareholders of Primobius.
Okay, well, let's kind of extend that out to the kind of the portfolio of projects that you've got going on. So if you look at the lithium-ion battery recycling component, there's a technology which you've got. Obviously, you need to build the infrastructure with your partners, and you feed that. With the vanadium recovery, you've got a technology with your partners and the feed through SSAB, and that makes sense. So I can understand that. Obviously, I think with the lithium chemical component with Eli, it's maybe a little bit earlier in the process, but one assumes that the model will be comparable to that. So as a business, if I'm looking at you and trying to understand the growth profile, the revenue profile, because as you quite rightly say, businesses are here to make money, not be busy being busy. How does one quantify each dollar that comes into the company? Is it a case of what do you do with it to kind of expand the reach, or how do you look at it? Because I'm sort of intrigued.
Yeah, well, look, Neometals as a head company has equity ownership in the recycling technology, the vanadium technology, and the lithium chemical technology. Within those incorporated joint ventures, we have the flexibility to deploy the technologies as principal with our partners, finding other partners that need a solution, or we can license them. So flexible business models, the same model for each one of those technologies. The battery recycling presents the largest scalable opportunity that we've got. We're going from 10 to 50 to 500 ton plants, and the market is just growing so large. I mean, you can see the boom in lithium battery production and EV production. Well, there's going to be lots of production scrap, and then 10 years later, there's going to be end-of-life recycling. So, that's why we've designed the plants to last 20 years. For the vanadium recovery, we own 100% of the technology, but we're developing that in a special purpose vehicle that we've got equity ownership in, and we're in a fundraising phase at the moment for equity and debt, and we'll dilute equity into that project, but we'll retain the royalty on the project. And then we've got other projects, and it doesn't have the same sort of scope as battery recycling, fair enough, but it'll still produce the world's largest volume of high purity vanadium that'll go into stationary energy storage batteries at a negative carbon footprint in the lowest quartile cost. So you do it because it's low cost and you can make money. The lithium chemicals, well, we own that technology 70% with Mineral Resources. We've been developing it for a decade. It's really a great bolt-on for the brine deposits because you remove the need to use expensive reagents. So there's great scope because, you can see all the hard rock deposits in Australia and Africa and Canada and South America are going to get developed. But then, we really have to start turning our mind to developing more brine deposits. And that's what the technology is perfect for. So that's got great scope. But as you rightly say, it's probably 2 years behind where the vanadium project is at the moment. But that's a fantastic pipeline. And so, we think we offer unparalleled exposure to all of those battery materials because they're low cost, low carbon. And we will have a mixture of equity holdings in various projects and royalties.
Okay. And just to kind of finish off, because it's, again, in mining parlance, it would be this kind of Lassonde curve, there's a bit of a dip in perceived value because you've got to finance the battery recycling hub. So just again, remind it. I know we've talked about it before, but just remind me.
So I mean, look, we've done this study because you have to be able to demonstrate to your customers and your stakeholders what the technology, what the economic benefits are. So we can quantify those down. I mean, that's why we're going down the model of plant supply and technology licensing that is very, very capital light and light risk. We have the options to participate in plants. We'd like to have that. The option to follow our money, maintain our share, dilute, what have you, separately monetize them, fund them outside of the head company And that's worked well for us. We haven't raised money for 10 years.